All right, we're going to go ahead and get started. Thank you all for joining us. This is the updates to the School Readiness Tax Credits for 2018 webinar. My name is Erin Carroll. I'm with the Early Childhood team here at the Department of Education, and I'm also joined by Nasha Patel, who will be talking to us a little bit later. Over the course of the webinar, we'll be talking through several things. Because we have such a large amount of content to cover and such a large number of individuals on the call, we won't be able to take questions at this time. However, you can always reach out to us with questions to earlychildhood@la.gov, and you can we'll have that email again at the end of the presentation. We are also recording this presentation for anybody who would like to see it later or anybody who misses it, and we'll be sending that in the newsletter that goes out tomorrow. Great. So for the agenda for today's call, we're going to be providing a description of the differences between the 2017 and the 2018 School Readiness Tax Credits, and hoping to provide some information that will prepare folks for the updates that will take effect in 2018. So we'll start by going over the vision for kindergarten readiness in Louisiana, providing an overview of the School Readiness Tax Credits historically, and talking about specifically what that means for the 2017 tax year. So for the tax credits, folks will be filing in the next few months. And then we'll do a deeper dive into what to expect for the SRTC for 2018, going through each of the different school readiness tax credits. We'll then talk about, give a quick overview of performance profiles and specifically discussing how they relate to the 2018 school readiness tax credits. We'll talk through supports that are available to centers and wrap up with some next steps. So first, we'll start with the vision for kindergarten readiness in Louisiana, which of course is the foundation for all of this work. So as most of us are familiar with at this point, over the past 5 years, Louisiana has worked to unify the early childhood system, birth to pre-K, to prepare all children through kindergarten. So included in this vision is shared high standards for what children should learn and what excellent teaching looks like. In this vision, teachers are excellent at interacting with children and guiding learning. The expectations for health, safety, and learning are consistent for all programs, and families are able to easily enroll and choose the best option for their children. So as we have done, worked very hard as a field, over the past 5 years, we've had several initiatives that have contributed to this, including the School Readiness Tax Credits. So as a reminder of the implementation timeline that we have been talking about for several years now, so of course all of this work began out of Act 3, which was established in 2012. Beginning in 2013, 2014, we started piloting the early childhood community networks. This expanded over the course of the next 2 years to 2015, 2016, when we achieved statewide implementation. We've then moved on to be working with performance profiles, with practice performance profiles in 2016, 2017, and then finally the rollout of the 2016, 2017 performance profiles, which will be tied to school readiness tax credits going forward into 2018. So with that, we're going to jump in and provide just a little bit more background for the school readiness tax credits as they stand today. So as we mentioned with the discussion around the vision for the unified system, Louisiana requires early childhood programs that take public funding to meet universal standards with a focus on learning outcomes rather than inputs. Louisiana also seeks to increase access and informed choice so that families can choose the best option for their children. Historically, the SRTC, Louisiana's School Readiness Tax Credits, have been a huge help for child care as they improve quality and access for at-risk children. we are now talking through how Louisiana has aligned these innovative tax credits with the universal rating system and the new child care teacher credentials in order to further increase kindergarten readiness and support child care. So the school readiness tax credits in Louisiana represent a $16 million annual investment in quality child care. So this is really a big financial investment from the state. This package of 5 tax credits, which began in 2007, have served as an important incentive for families to choose quality-rated centers, for providers to serve vulnerable at-risk children, for directors and staff to pursue additional education and credentials, and for businesses to donate to child care centers, as well as for businesses or individuals to donate to resource and referral centers. Additionally, the tax credit funding helps Louisiana secure more than $80 million of federal funds through our Child Care and Development Fund block grant. So as we mentioned, we know that the school readiness tax credits are essential to Louisiana's early childhood sector. So they are essential because they help us maximize funding. As I mentioned, they help us bring in over $80 million of federal funds. They encourage centers to serve CCAP children. So many centers have become or have stayed a Type 3 child care center in order to be able to participate with those school readiness tax credits. They help drive improvement by rewarding centers for quality. They assist child care directors and teachers by providing them the recognition and financial support dependent on their pursuit of education and commitment to the field. And then they increase the local support and investment in child care by supporting businesses and resource referral agencies who use the credits to further support child care. So before we shift into going into detail about the 2018 changes, we want to first provide an explanation of the process for 2017. As a reminder, the SRTC for 2017 are the tax credits that everybody will file right in the beginning of 2018. So the tax credits that are based on the 2017 tax year, which we are just closing out now, are the ones that you will receive communication about over the next few months and file sometime between January and March. So the key point here is that there are no changes to how teachers, directors, centers, or families will qualify for the tax credits that are based on the 2017 tax year. So specifically for teachers and directors that are claiming the 2017 school readiness tax credits, just as every year before, teachers and directors will receive a letter indicating their level on the 1 to 4 career ladder levels from Louisiana Pathways in January 2018. This will be based on the level that they achieved during 2017. Teacher and director levels will be based on the current career ladders. So these are the ladders that are on the Louisiana Pathways website and that have been shared with you if you are enrolled in the system. However, there is one key update that we really want to emphasize as a key change for this year. So beginning this year, teachers and directors, when they receive their communication from Louisiana Pathways, will receive 2 copies of the form R10615. That's the tax form that teachers and directors receive. One original copy will need to be signed and kept for tax documentation. That's the same process that has always existed. The second original and signed copy must be mailed back to Louisiana Pathways. So teachers and directors will receive 2 copies of this form. Both must be fully completed out. They may not be photocopied. and 1 must be mailed back to Louisiana Pathways, and 1 must be kept or submitted with tax documentation. I'll talk about why that is the case a little bit further, but by mailing forms back to Louisiana Pathways, teachers will be able to begin qualifying for higher tax credit levels in the future. For providers claiming the 2017 SRTC, they will receive their December notice of their 2017 STAR rating, which will be based on the last received Quality Start rating. Providers will receive directions on filing the 2017 Provider SRTC, which, just as always before, can be done no earlier than March 2018. For families claiming the 27 SRTC, just as before, centers will receive forms to complete and distribute to families in January. And just as before, businesses and resource and referral centers will receive the required documentation for their 27 SRTC. Okay, so now we're going to shift to providing additional information on what will happen for the 2018 School Readiness tax credits. So these are the tax credits that are going to be earned during the 2018 year and filed for in the beginning of the 2019 year. They're based on the 2018 tax year. So the approach for Louisiana's School Readiness tax credits relies on the following beliefs. So if Louisiana redefines STAR ratings to recognize sites that provide quality interactions as measured under the Unified Rating System, if we are rewarding performance and improvement via tax credits and bonus payments, if we continue to offer new options for directors that reward site performance and offer new options that attract and retain our very qualified child care teachers, and if we maintain incentives for families, private individuals, and businesses to support child care improvement, then more Louisiana children, especially those under age 4, attending our child care centers will have access to quality programs that prepare them for kindergarten. And just as a reminder to those who have been plugged into this for a little while, so we started these conversations around the changes that will affect the 2018 tax year almost a year ago. So beginning in February 2017, we began providing in-depth information, starting with a conversation and a presentation with our Early Childhood Advisory Council about the proposed changes. We did a statewide webinar, which is recorded and posted on the website for anybody who's interested in reviewing that. In March 2017, we shared that information with the field through the Early Childhood newsletter and provided a calculator to help centers begin predicting the impact for their own center. It was also in March 2017 that we brought the proposed changes, which had been endorsed by the Advisory Council in February, to BESI to review, and they approved those as well. In spring 2017, we began communicating around the performance rating calculator, which is tied to the performance profiles and STAR ratings, as we'll talk about in just a few minutes. And then finally, throughout the 2017 legislative session, the department provided information about the updates to the state legislature as is required. With that, I'm going to give a quick summary of the changes that we'll be talking about, and then we'll go through each of these tax credits in more detail, really getting into all the details about the changes that are forthcoming. So through these revisions, Louisiana has revised the tax credits to align with the Unified Rating System and reward teachers and directors for their dedication to the field and their work in achieving the Early Childhood Ancillary Certificate. So for teachers and directors, directors beginning in 2018 tax year will be able to earn credits based on their site performance, and teachers will be able to earn an increased tax credit based on their ancillary certificate. Teachers with an ancillary certificate will be able to earn the highest level of tax credit for working at a publicly funded center and for receiving tax credits for 2 years or more. And a key point here, no staff will lose their current credit level based on these changes. These changes are only adding options for teachers and directors. For providers, the key shift here is the way that stars are awarded will be based on the performance profile rating, which centers have recently received through the Louisiana School or Center Finder. For families and businesses, the credits will still be based on stars. The key difference for them is that that star rating will be based on the unified rating system. And for resource and referral centers, there will be no changes. Okay, so we will start by providing some additional details about the teacher and director school readiness tax credit and the changes that will be in place for 2018. So the state will now offer new options to reward directors based on performance and encourage teachers to earn new child care teaching certificates and serve in the child care sector. So a few high-level points for how it works in 2017 and has worked historically. Credits have been based on the education level. The teachers and directors must work in the center for at least 6 months. The credit has been available to all staff at rated centers, regardless of rating. Credits are refundable, and credits range from around $1,600 to around $3,300, of course adjusted every year based on the CPI. The key policy alignment that will begin with the 2018 tax year. So for directors, there will be the option to earn levels for proficient performance on the on the performance profile rating for your site. For teachers, there will be the option to earn higher levels for the ancillary certificate and years of service to the field. So the impact for this, no staff will lose their credits. This will only add new options. More staff may be eligible as all Type 3 centers are participating in the unified rating system. Directors can be rewarded for performance and their impact on children. Teachers will be rewarded for obtaining the ancillary certificate. And we hope that this will encourage and support those teachers that are staying in the field and recognize them for their commitment. So digging into some details about what this actually looks like for the teacher career ladder for the school readiness tax credit. So teachers will now be able to qualify by obtaining an ancillary certificate and remaining in the child care field. A key change is that professional activity and experience requirements will no longer be required for teachers. So beginning with 2018, teachers on the staff and teacher career ladder will not have to demonstrate their professional activity and experience requirements. As you can see on this ladder, the current options for how to qualify for Teacher 1, Teacher 2, Teacher 3, and Teacher 4 still remain. There is an addition for Teacher 2 of their Early Childhood Ancillary Certificate. In order to get to Teacher 3, a teacher can do that by earning the Early Childhood Ancillary Certificate and by demonstrating evidence of eligibility for the staff school readiness tax credit at least once before, beginning in 2017. This is where it becomes essential that we communicate to the field and we remember to start sending that second copy of our tax form back to Pathways. By sending that second form back to Pathways, teachers will be able to qualify for Early Learning Center Teacher 3, and as you can see, Early Learning Center Teacher 4. So in order to qualify for Early Learning Center Teacher 4, the highest tax credit level, a teacher will be able to do this by demonstrating that they have their Early Childhood Ancillary Certificate and demonstrated evidence of eligibility for the staff school readiness tax credit at least 2 years prior, beginning with 2017. So this is not a change just for this year, the sending of the tax form back. It is a change going forward. Teachers will be asked to send that tax form back to Louisiana Pathways, an original copy, as well as keep an original copy for themselves. We do want to provide some quick additional details that are specific only for the 2018 year. So in 2018, there are some additional ways for teachers to qualify for Early Learning Center Teacher 3 and Early Learning Center Teacher 4. This is because we have added these requirements that evaluate 2 and 1 year before, and we added them during the 2017 year, so there will be some additional ways for teachers to qualify. So for 2018, the tax credit that teachers can earn based on the 2018 tax year, which they will apply for in early 2019, in order to qualify for Early Learning Center Teacher 3, the teacher will have had to have been classified as Early Learning Center Teacher 1 or above as of the end of 2017, and they will have had to demonstrate that they earned their school readiness tax credit by sending back that tax form in 2017. In order to earn Early Learning Center Teacher 4, the teacher will have to have been an Early Learning Center Teacher 1 or above as of December 31st, 2016, so last year, and they will have had to turn in their staff school readiness tax credit form for 2017. Again, this is how this will work for the 2018 year. Following the 2018 year, this will be measured by teachers having their Early Childhood Ancillary Certificate. So again, this really just drives home, remember to send back that new form, that extra copy that teachers will begin receiving this year. It will really help teachers qualify for higher tax credit levels. And then finally, the Director School Readiness Tax Credit. So again, there have been no changes to reduce the ways directors can qualify for levels. There have been some additions. So beginning with 2018, directors will be able to qualify for tax levels based on their STAR rating, which is of course going to be based or drawn from their performance rating, which we will talk about in just a second. So Director 2 will be earned by meeting the director qualifications from Bulletin 137 and having been the director for at least 1 year of a 3-star quality rated center. Director 3, meeting the director qualifications and have been the director for at least 1 year of a 4-star quality rated center. And Director 4, meet the director qualifications and have been the director for at least 1 year of a 5-star quality rated center. A key point to note here, so this slide only displays the education levels for directors. For directors, the professional activity and experience requirements will remain. So there will be no change to the professional activity and experience requirements as there were for the teachers. Okay, before we shift to talking about the other tax credits, just a few key takeaways. So the 2017 tax year, there are no changes to how teachers and directors qualify for 2017 tax credits. The only change is a change in process, and that is to ask that teachers and directors mail an original version of their tax form, which they will receive two of, to Louisiana Pathways, as well as retain one original version for tax purposes, as they always have before. The impact of these tax credits, we expect that these will impact all eligible centers, regardless of star rating, as all teachers will be eligible for credits based on ancillary certificate and years of service. Qualifying criteria, directors, beginning with 2018, directors and teachers must work at an eligible center for at least 6 months and an average of 30 hours a week to qualify. Additionally, only the director can receive the director credit, and there is a limit on the number of directors per site based on license capacity. The professional service and years of experience requirements, teachers will no longer have to meet the professional organization or experience requirements, and directors will continue to have professional activity and experience requirements as they do now. With that, I'm going to turn it over to Nasha Patel, who will begin talking us through the provider tax credit.
Great. Thanks so much, Erin. So provider tax credits also change in 2018, but not for 2017. So as your stars were awarded for 2017, those are the ratings that you will use to file your school readiness tax credits for the 2017 tax year in the beginning of 2018. Note that the provider tax credit is based both on the rating and on the number of CCAP or foster care children served as a center. So star-rated centers with no CCAP children do not receive this tax credit. And this tax credit is refundable, and both for-profit and nonprofit centers are eligible for this tax credit. The big change for 2018 for the provider SRTC is that these stars have now been redefined to be based on the unified rating system. That's the performance profile ratings and scores that you received in November of 2017. These ratings have been aligned based on the chart that you see here. So a 1-star is equivalent to a 3 to 3.74, and a 2-star is equal to a rating of 3.75 to 4.49. So basically, if you were an approaching proficient center, you scored either a 1-star or a 2-star. 3-star is aligned to a score of 4.5 to 5.24, and 4-star is aligned to a score of 5.25 to 5.99. So if you are a proficient site, you scored either a 3 or a 4-star. And then excellent, which is a rating of 6 to 7, is equal to 5 stars. The impact here is that even if you were a center that did not previously participate in the school readiness tax credit process and you didn't elect to get evaluated to become a 1 or 2-star center, you are now eligible for the SRTC because you participated in the performance profile system. However, the fiscal impact really only changes as more children are enrolled in higher quality care and education because the payments for SRTC is aligned to the different star ratings. One thing that we're also going to cover here that's separate from the school readiness tax credits are the CCAP bonus payments, which can help to minimize disruption during this transition year. So it's important to pay attention to what payments you'll receive during this 2018 year. So as I laid out below, before, the chart below shows the overview of the changes and the ratings as they've been aligned to the star levels. And you can see the differences in tax credit per eligible child on this chart. So 1-star centers do not earn any school readiness tax credits, but 2-star centers, beginning at that 2nd star, will get $750 per eligible child. 3-star centers receive $1,000 per eligible child, 4 stars receive $1,200, and 5 stars receive $1,500. So the example below is that if ABC Childcare has earned 3 stars and serves 10 eligible children, then that provider is eligible for a refundable provider SRTC of up to 10 children times $1,000 per child, which equals $10,000. Refundable means that even if your tax burden is below that $10,000, you will get that money back through your tax refund. So this can be a little bit confusing because we're talking about multiple years here. For the purposes of tax year 2017, you must have had your stars awarded under the previous system. The stars that you had for 2017, you file for taxes beginning January 1st, 2018, so in a little under a month. For the tax year 2018, you must have received a star through the 2016-2017 performance profile ratings that were released in November 2017, meaning that if you did not get a performance profile rating in 2016-2017, then you do not have a star for the 2018 tax year. Additionally, the site must be an open Type 3 center on July 1st, 2018 to benefit for the 2018 tax year. And then for 2019, you will receive a performance profile rating for your site based on your 2017-2018 scores if you're participating this year. And that rating will be released in November 2018. And that will be the tax, that will be what you use to file for tax credits for tax year 2019. So that site must be an open Type 3 center on July 1, 2019. So the observations that you are doing right now during the 2017-2018 year to benefit from those scores, the center must be open and be a Type 3 center on July 1, 2019, and they will file for those tax credits beginning January 1st, 2020. So I know this might be a little bit difficult to read. We apologize. It doesn't look like this on the slides that are posted on the website, but it will look like this just for this webinar. But basically, we revised the CCAP bonus structure to align with the SRTC changes that were made for 2018. And unlike the school readiness tax credits, this does start to take effect in 2018. So right now, providers receive quarterly bonus payments equal to a percentage of all child care subsidy payments received in the prior quarter based on the center star rating. These bonus payments are going to change slightly after this year. So the pilot bonus, which was a bonus that was initiated during the pilot process of the Act 3 work that was happening, will go away since there are no more pilots. We are now a statewide accountability system. And the new unified CCAP bonus structure reflects a 2% increase in the CCAP bonus payment. And this bonus payment will change each year for 2-star centers to essentially phase out the bonus percent payment for 2-star centers to incent providers to reach that proficient rating of 3 stars and above. So again, no changes for the 2017 bonus, which you have been receiving quarterly throughout the course of this year. And that last payment for 2017 will be in February 2018, and that will be based on the last quarter of 2017. So October, November, December gets paid in February 2018 and will look the same as it has all year for you. The first bonus payment that you will receive based on the 2018 bonus percentages will be in May 2018, and that will be based on January, February, and March. And so these bonuses are different from SRTC, which is paid out of state funds. These bonus payments are federal funds that are used to meet the federal quality requirements and serve as a bonus or improvement for child care centers to continue to support their work. So I know that it might be confusing to ask what eligible children is. This process has not changed. This will look the same as it always has. Eligible children, both for SRTC and for the Unified CCAP bonus, is the same. It's full-time participation in CCAP or in the foster care program, which means that CCAP or foster care paid for at least 12 days of service for that child during that month. 2 part-time participants may be combined to be equal 1 full-time participant for the purposes of this calculation. And a child is considered to be attending part-time when CCAP or foster care participation, or the foster care program pays for at least 40 hours of service per child during the month, or at least 5 days, but no more than 11 days of service per child during the month. So again, this is how you can think about your eligible children, the ones who participate in CCAP or foster care full-time, or 2 part-time to equal 1 full-time. and they're used to calculate eligible children for both the school readiness tax credit and the unified CCAP bonus. The key takeaways for centers here is that centers receive their 2017 credits based on their quality start-to-fund stars. The stars that you had had previously, those are the stars that you will use to file for your 2017 tax year SRTC that you file in the beginning of 2018. The 2018 star ratings are based on the 2016-2017 performance profile ratings. They are currently published in Louisiana School and Center Finder at www.louisianaschools.com. The last bonus payments for the 2017 stars are paid in February 2018. So that's based on the last quarter of the 2017 year. The bonus payments beginning with the first quarter, which is January, February, and March of 2018, and those are paid in May 2018, will be the one unified CCAP bonus payment, and it's based on the 2018 star rating. That's the rating that's in Louisiana schools right now. As we noted before, between 2018 and 2021, the CCAP bonus payments for 2 stars providers will decrease over time to encourage improvement. Note that if you're a provider who receives LA4, NSCCD, or the pre-K expansion grant, and your star rating changed from 2017 to 2018, that does not mean you will lose these slots in 2018-2019 based on your change in star ratings. Also, to be eligible for school readiness tax credits, providers must continue to remain in compliance with licensing requirements. That has not changed from the previous requirements for school readiness tax credits. All right, so similar to the provider school readiness tax credits, the biggest change for family school readiness tax credits is just that the star ratings have changed. Meaning that while previously the stars were defined differently for 2017 and before, moving forward from 2018 and beyond, these stars are now aligned to the performance profiles that the department will release in November. Since all Type 3 centers that participate in the performance profile system and get a rating are now eligible for school readiness tax credits, more families may now also be eligible for these family SRTC. However, eligibility depends on, or the amount of the benefit for families, and also their eligibility depends on their income status. So again, for the 2017 tax year, there are no changes for how families qualify for those credits. They will get the same forms that they always have, and they're based on the 2017 star rating that each participating child care center received. And they will get a form that tells them what their star rating is. However, families receive information about, and qualifying for the family SRTC, families receive that information about how to claim their SRTC from child care centers no later than January 31st of the succeeding year. And that tells them what their star rating was in 2017, so they know what they're eligible for. The families, in order to get that SRTC, must have incurred child care expenses for at least one child under the age of 6 during the calendar year. And that family must have been enrolled in a center that earned at least 2 stars. For businesses, the same change that was big for providers and for families is also true here, that the stars have now been redefined to be based on the unified rating system, which is the same as the provider credit. For resource and referral agencies, as before, it is a dollar-for-dollar tax credit for grants to child care resource and referral agencies. The maximum is $5,000, and it is refundable. These have not been changed. However, with an increased number of centers participating, there are more opportunities for businesses to invest, both the business tax credit and the R&R tax credit. So I know that I've mentioned a few times the performance profiles and how they relate to 2018 stars. We're going to go into a little bit more detail on that here. So as you've seen, tax credits and bonuses for child care centers have been revised to reward performance and improvement within the performance profile system. So as you know, 2016-2017 performance profile ratings determine star ratings for centers for the tax year 2018. And you can see the alignment here to the ratings and to the scores. Note that you can find these ratings in School and Center Finder. So the 2018 STAR ratings were released along with the 2016-2017 performance profile results in the new Louisiana School Finder. So what we wanted to talk about a little bit is what our approach is for these performance ratings, since this has changed significantly how centers are rated for school readiness tax credits. Louisiana uses class to measure, provide information on, and support improvement on the core elements needed for quality, and those are adult-child interactions and instruction. We use two versions of the tool currently, the pre-K version and the toddler version. The pre-K version has 3 domains, and the toddler version has 2 domains. And there's key indicators in both about creating a warm, positive environment and building trusting relationships with children, organizing daily routines and minimizing disruptions, and helping children learn concepts and connect ideas through dialogue and play. We know from research that class is correlated with child outcomes, and we also know that the tool itself supports teacher growth by providing useful information for coaching through in-depth class observations that take place over 4 20-minute cycles. We also received national validation of Louisiana's approach through research conducted by the University of Virginia. Their research took place across the state in 90 child care, Head Start, and pre-K classrooms that were serving 4-year-olds. And they assessed children directly using a math, literacy, and a executive functioning test as well. They assessed those children directly, as well as conducted regular class observations in the classrooms, and they conducted surveys of multiple stakeholders in these programs. Their initial results indicated that Louisiana observations were accurate. Both local and research class scores were closely aligned. They also found that children were learning more in classrooms with higher class scores by administering these direct assessments to children. And they looked at other quality measures that Louisiana has typically used in the past and that other programs may also use across the country, and found that adding other quality measures does not help identify effective classrooms. So performance ratings are calculated using class observations and a set of rules that are established in Bulletin 140. So basically, to calculate that overall score, that overall rating that you received as a program, all of your site's dimension scores across all domains are added together and divided by the total number of dimension scores. So we don't go back to the raw cycle scores, but we do use the dimension scores, the average dimension scores for each observation. We do that for both the overall score at the top, and then we do the same thing for the domain scores that are included on the performance profile. So all of the site's dimension scores within the domain are added together and divided by the number of dimension scores. As you probably already know, the negative climate dimension is not included in any of these ratings. It's pulled out separately, and if a site has high negative climate concerns or scores, that is indicated using a flag on the performance profile to communicate to families that this is a high concern for this site. Additionally, when local observation scores are missing for a classroom within a semester, we will use third-party scores when available for that classroom for that semester. We will also use the average of the site's third-party scores if no other classroom score is available. We additionally replace local scores with third-party scores if the domain scores differ by more than a point or if there are consistent inaccuracies. If you haven't had an opportunity to check out the Louisiana School Finder, we invite you to visit it at www.louisianaschools.com. This is a way that families can find different programs that are available to them and can serve their children. And it's searchable both by name and by area. Within the School Finder, you'll have seen that your STAR rating, if you are a center, a licensed Type 3 center, that your STAR rating is listed on that overview page. That STAR rating, as I mentioned before, is the 2018 tax year STAR rating. So it should not be used for what you're filing for in 2017. You should use your previous STAR rating that was correct for 2017 when you file in beginning January 1, 2018. However, for the 2018 tax year, this is the STAR rating, the one that's in School Finder, that will be used. Additionally, as I mentioned before, your unified CCAP bonuses that begin with the quarter that begins January 1st, 2018 and will be paid in May 2018. Those bonuses will be based on this star rating that's in School Finder now. Let's talk a little bit about the supports that are available for improvement. Louisiana provides several supports to child care centers to support improvement and provide quality training and preparation for teachers. For the second year, Louisiana is conducting the Child Care Curriculum Initiative, which supports centers, Type 3 centers, to access a Tier 1 toddler and pre-K curriculum. Centers can receive training on how to use and implement this curriculum through research and referral agencies. Note, even if you participated in the Child Care Curriculum Initiative last year and purchased 2 kits last year, you can again participate this year and purchase 2 kits this year. Additionally, through research and referral agencies and the Mental Health Consultation Program, centers are able to access targeted coaching that is responsive to their class scores. Finally, there's the Early Childhood Ancillary Certificate, which child care teachers can continue to complete professional training and receive their certification, often through BESI-approved Early Childhood Ancillary Certificate Program. So let's talk through your next steps. Note again that for the 2017 tax year, nothing has changed. The only update for 2017 SRTC filing is what Aaron was talking about, that staff must send an original copy of the form to Louisiana Pathways. This is a new thing that will allow teachers to benefit from additional levels of SRTC. So beginning January 2018, centers, teachers, and directors will file for their 2017 taxes and receive credits based on their 2017 star rating and tax credit levels. Centers also receive their new 2018 star rating under the Unified Quality Rating System. That 2018 star rating is based on your fall 2016 and spring 2017 observations. And that's what your unified quarterly bonus will be based on. Teachers and directors begin qualifying for tax credit levels based on ancillary certificate and star rating additions. So throughout the 2018 tax year, January 2018 to December 2018, centers receive their final quarterly bonus payment based on their 2017 star rating in February, meaning the payment for October, November, and December of 2017 will be paid in February 2018, and that's the last payment based on your 2017 star rating. Beginning in May 2018, centers will receive their quarterly bonus payments based on the new 2018 star rating. That first quarter payment for January, February, and March is paid in May. In January 2019, centers, teachers, and directors will file for their 2018 taxes and receive tax credit and receive their school readiness tax credits based on the 2018 star rating and their new tax credit levels. And centers will receive their 2019 star rating, which is based on the observations taking place right now, that will be used for future tax credits. We know that this can be confusing, especially as we're looking at years over years, and we often have to chart it out ourselves to make sure that we're understanding the difference between the tax year and the filing year and the year that you're earning the credit. So to help you understand that, we've released an SRTC guidebook linked here that provides information about the SRTC for 2018 and beyond. Note that this guidebook is specific for 2018 and beyond. It incorporates all the updates that are taking place. So to help you understand what you should be doing for this year, SRTC 2017, we've released a set of FAQs for each audience: staff and directors, businesses, child care providers, and parents. We also released other tools in the spring of 2017 when we made these changes to policy that can be helpful to you. There was a presentation made to the Early Childhood Advisory Council about the proposed changes, and a calculator was released that you can use to enter in your rating as well as your eligible children and understand how much money you'll be able to receive both through SRTC and through the Unified Bonus. If you have any questions, you can send them to earlychildhood@la.gov, and we'll try to answer your questions as best as we can. You may also have questions for your tax preparer or for Louisiana Revenue, and that information to contact them is also in the SRTC guidebook and the FAQs as well. Thanks so much for joining us today. We hope this has been helpful. As Aaron noted, we will provide these slides as well as the recording in the newsletter that is going out tomorrow. So you'll have this information well in advance of things taking place beginning in January 2018.